Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hope all of you have had a very nice weekend so far. And in today's video, guys, most of all these options are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that I like to run on the channel. Now, those of you that have been with me for a while know that I've made over 77% gains in 2023 using this strategy. And so far in 2024, we're doing pretty good as well, right? Over about 70% annualized ROI, and we are beating out the S&P 500 by roughly a factor of almost 2.5 to 1. So it's been a fairly decent year so far with a lot of trading left before the end of December. So in today's video, guys, we're going to do a few things together. Number one, we are going to set the context for the week. Where do we stand after the massive rally of last week? And is it sustainable, or are we possibly looking into a pullback? Are there any macro events that stand in our way as well over the course of the week? So we'll set a little bit of the context, number one. Number two, we're going to go over a few of these strategy rules that I like to look for when I'm shopping for puts to write on my favorite stocks. Then after, guys, we'll get into the top 5 options plays of the week. And of course, as usual, I have a ton of bonus plays for you and also a earnings strategy as well. The earnings strategy that I've been showing you guys for the past 2 weeks. And you can see the results just last week trading the earnings strategy, guys. We went through a ton of contracts and they were all wins. The week before that, we ran this same strategy and most of all were wins, and the losses were extremely small. We only took 2 tiny losses, one on Robinhood for $11 and the other one for SoFi for only $3. And as you can see, guys, in terms of running the wheel, the regular wheel positions, they always usually are very, very good. We did take a few losses that we got assigned a few months ago, but other than that, I'll just scroll up real quick. All the wheel trade sections since I started this Discord over 2.5 months ago at this point, a lot of wins, guys, and myself and all the members have made a decent amount of money. So let's keep going and let's have a beautiful week, shall we? So let's jump right into the video. So in terms of the expectations for the week, guys, well, obviously we know that the SPY is hitting the top end of the trend line, slightly overbought conditions as well, and we may be anticipating a little bit of a pullback. Now, if we do get a pullback early Monday or Tuesday, just keep in mind, what are we looking for here? Just looking for a daily higher low for possible further trend continuation. Why the further trend continuation, guys? Because the bulls control all the higher time frames. A monthly, gorgeous uptrend. Weekly, gorgeous uptrend, and renewed weekly up leg swing as well. So we're looking very good, which is why I maintain any dips early on in the week should be a great opportunity to write some puts off for the Friday close. On the SPY and the QQQ, same analysis as well. Tech has been one of your outperformers recently, so I do still believe that any dips that we have early on in the week could be a juicy opportunity, guys. Looking for the breakout, retest, and possibly further trend continuation. The bulls control everything, guys. All the weekly timeframes are in their control as well. And it's going to take a lot of work from the bears, guys, if they want to undo last week's big breakout candle. So I do think this week should be fairly smooth sailing just in terms of the technicals. The bulls have so much long-term control that I don't think anything can majorly unravel this week. Couple that with the fact that we don't really have any major news catalysts either. Only a few Fed members speaking on the Tuesday session. Then we have CPI on the Wednesday, but we know that inflation has not been much of a concern as of recently. And even if it comes in slightly above the estimates, guys, unless we get month over month continuous increases in inflation, I don't think the market is going to react in a negative way. So that's pretty much everything for CPI. Thereafter, we get some producer inflation numbers on Thursday. Also not expecting those to have a significant uptick. And then lastly, on the Friday session, we get some retail sales. Retail sales as of lately have been okay. They haven't been fantastic, but they also haven't been, signaling that we're on the verge of a massive recession either. They've kind of been cooled down, but still fairly good. So all in all, I'm not expecting any major news catalysts this week to really be able to derail this new leg of the bull market. So looking fairly good, all things considered, right? Now, in terms of everything else, guys, well, let's move into the strategy rules and then we'll jump into the top 5. And I'm going to fly through these rules, guys. I spend too much time on these, granted, on any given week. I spend about, 7-10 minutes, but now we're going to cut it down to just 2-3 minutes because I want you guys to watch the 30-minute video that I will leave down below in the description if you want a detailed version of how I run this strategy, how I write my puts, how I choose my strikes, how I choose the stocks that I'm willing to do, well, then you can find the link down there in the description. But for today, we're just going to do a general overview, and I will, moving forward, take for granted that you guys already understand most of these rules. This is just to reiterate a few of them, right? So number one, what you want to do, you want to build a watch list of all your favorite companies. And then on the Monday, Tuesday session, you filter by red. We're only looking for companies that are down when we're looking to short puts, when we're looking to write puts, guys. We do not want to chase the market to the upside. So that's step number one. I always go on a Monday morning and Tuesday morning, filter by red, and then see if there's any names that I like at any levels that I like. So number one has to be a very solid company, guys. Never write any puts on a company you do not want to own. It is rule number one for a reason. If you get stuck with a stock you don't want to own and you constantly have to every day open your phone, look at the stock and wonder why you're in it, well, obviously it's going to be tough to manage the position. Number two, you want to find stocks that are in a monthly uptrend or at least a long-term range, something like a Microsoft, right? We know that the long-term monthly uptrend is decently up, and now they're also in a long-term range. So we want to be targeting the bottom end of these ranges, acting as support locations, usually very high probability trades when we're looking to sell puts, right? Number three, the company needs not to have any earnings this week. Earnings are way too volatile, guys, and you can end up with some very big losses. So if you want to stay true to this strategy, never do any stocks that have earnings this week. I'll show you a strategy for earnings later on in the video, but still, I never really advise doing it, guys. It's just too risky. Number four, we want to look at stocks in a support area or an area of breakout retest. Well, if you pull up Autodesk's chart, you'll notice that there is a massive 1.5-year range of support down here. So writing puts at a big support is usually a good proposition. The breakout retest is very simple, guys. It is looking for a weekly breakout of a big range or an all-time high. The breakout, the retest of the previous level that was resistance, now it's support, and then run. Usually the retest is a very high probability trade. As a matter of fact, Coca-Cola is doing one of those now on the long-term time frames. Breakout on the monthly, retest the top end of the range, and possibly find some support and continuously run. Hopefully that makes sense. Number five, we're going to be looking for stocks that are at or lower than the expected move. This is also very important in the analysis, guys. If you don't know what the expected move is for a stock, go to this website right here, optionsai.com. It is free. You do not need to create an account. Just type into Google, Options AI expected move. It'll take you directly to this page. You'll see the expected move for the week. I have Elf Beauty pulled up right here. Is about 5.5%. We want to be writing puts below the expected move, guys. It improves our probabilities of not being assigned. If a stock dips really hard early in the week, close to the expected move, we can expect some mean reversion thereafter and bring us back within the expected move. So you want to be writing below here to improve your odds. Number six is also in line with the previous point. We want to be writing on a red or flat day. Since we're trying to get below the expected move, well, if the stock moves up 3% on a Monday, guys, we're going to be too far away from down here. So you need the stocks to be red, pulling down into the expected move to give you a chance to write under it. Once again, improving your odds of not being assigned. Now, the next point is your ROI. We want to be writing between 0.5% and 0.75% in weekly premium. Now, I know a lot of you guys use deltas, right? But the problem with deltas is that depending on the volatility of the stock, of course, the deltas are going to be varying between different stocks, right? Some are going to be $10 away from a current price, or rather 5% away. Some are going to be 7% away. Some are going to be 2% away, right? The reason I use this rule is because it's very easy to understand when you're going through the options chain. 0.5%, guys, is if I go on Elf Beauty, let's say, and I'm interested in writing Elf Beauty short puts at around the 110, let's say, right? If you go and respect all our rules, we're looking for a breakout retest trade. I'll just give you guys a heads up, right? So this on the daily is somewhat of a breakout or retest and possibly run trade. So let's say I'm interested in picking the lows here at about 109, 110, and that's the entry I'm looking for. Well, I will go to the chain at 110 and see there's 71 cents there. That is more than 0.5%. How do you know mentally it's more than 0.5%, guys? Well, all you got to do is divide the strike price by 2. That is 55, and you need to see 55 cents on the bid. That will always be 0.5%. If you don't want to take my word for it, just do the math. 0.55 divided by 110 is 0.5%. So this is an easy way, if you don't have delta on your options chains, to just go through many different options chains really quickly, and at visually, a first glance, you can see whether or not it's giving 0.5%. Usually you want to look for at least 0.5%, guys. Don't go too close. I know there's very nice premium too close here, but the risk of assignment is too large. So the reason I use the 0.5% rule is because if we're always staying within these parameters, it has a very good risk, trade-off between we make decent money, but the risk of assignment is also low. And this has been the sweet spot that I've found after running this strategy for 5-6 years. It gives the most amount of money with the least amount of risk of assignment, right? And then we want to set a take profit at 90% of the contract value. The nice thing about this strategy is the fact that it's very passive. So in the event that you write something on a Monday or Tuesday morning, and then by Tuesday afternoon or Wednesday morning, it is 90% profitable, why would you keep it all the way to Friday? You may as well just close that trade and go shopping for something new to optimize the remaining days in the week. And then in the event we get assigned, guys, so writing puts is basically a buy limit order, right? It allows us to get into a stock for cheaper. If you want to get out, we're going to write covered calls. This acts as a sell limit order, and the same rules apply. We're looking for 0.5 to 1% in weekly premium, and I'm always going to be writing the covered calls at the assigned strike price of the puts. So let's say I end up buying ELF at 110. I will write the covered calls at 110 the following week, or one strike higher. One strike higher only if the following week ELF Beauty opens up at like 114, 115. It gaps up from your assignment price from the Friday to the Monday. Only then will I consider writing a little bit higher than my assigned strike price. So those are all the rules, guys. Hopefully you appreciated that. As I said, if you want a more detailed view, well, go down. There's a link in the description. 30-minute video on my YouTube channel, which goes way more in depth than I just went today. So now let's get into the top 5, shall we? So stock number 1 for the top 5 is going to be Coca-Cola. So I like Coca-Cola. I just brought it up a few minutes ago. Monthly breakout, retest, and possibly run. Also the fact that now, this is of course the prior resistance to the all-time highs, now should be support. Coca-Cola is trading below the 200 daily moving average, which is rare for Coca-Cola. And the RSI down here on the daily is down sub 25. You can go back in history and find all the times that Coca-Cola was trading sub 25 on the daily RSI in oversold conditions, and usually you get a nice little bounce. So that's why I like trading Coca-Cola down here. The expected move for the week is 62.86. Let's go shopping for some premium. And can we find any premium on Coca-Cola below the expected move? So give me a second. And let's look at the options chain, shall we? So the expected move, once again, 62.86. So Coca-Cola, I mean, I will have a little bit of leeway on it because it's not that volatile, right? The implied volatility is very, very low. You almost need to be on top of the share price to actually be able to get some juicy premium, right? So as you can see right here, the expected move is 62.86, but if we go below that, there's nothing here at all, right? You want to find at least 31 cents. Once again, if you don't know how I'm doing that in my head, it's half of the strike price. Divide this by 2 and you look for that on the bid. That is your 0.5% rule. So at a first glance, the 62.50s aren't providing much either. It's really the 63s. So what we're going to be waiting for on Coca-Cola this week is if we get one more little push down here, Monday or Tuesday, into the low 63s, I will probably be interested in writing actually the 63s. Now, in the event Coca-Cola opens up Monday and has a minus 1.5%, 2% day and blasts past the expected move right away, well, then we can have access to the 62.5s or the 62s. So essentially what I'm saying is, depending on the size of the move down Monday or Tuesday, I'm interested in anywhere between the 63 to the 62 strike. That is for the Friday, guys. Now, I get a lot of people that ask me, yeah, but you always write weekly options. Can we write longer dated options like 30, 45 days? Of course you can, guys, but just make sure that you're getting the required ROI, at least 0.5% per week. So if you have a 4-week time horizon, you want to be getting at least 2% total for that whole contract, right? 0.5% per week. But we know that when we write further out, we usually get less ROI. So I'm willing to sacrifice a little bit. Instead of getting 0.5 per week, if you can get 0.4 per week, that's pretty decent, right? Because I know what a lot of you guys want to do. You want to write the longer dated contracts. That way, if it runs, well, you can just pull forward a lot of that premium quickly, which is a strategy that I use too. So that's stock number 1. Now, strategy number 2 is going to be for Uber. So number 2 is going to be Uber. I love this stock, guys, for a few reasons. Number 1, the valuation at $70 is extremely good, right? We are also in a very nice long-term uptrend, and we're kind of building this whole range around the 70 to around mid-60s, right? Let's call it $65 to $70. Nice monthly support in that range right there, long-term support. And the recent batch right here is about 72 down to about 69, right? So I'm going to be looking to right below there since I did like their earnings. The expected move is 69.81. Let's go shopping on Uber and see, can we find anything for the week below the expected move on Uber? So let me just pull it up real quick. So we're going to be looking for 69 or better, guys. Let's take a look at Uber, and we can see that at a first glance, well, the 69s are not paying enough, right? To get 0.5%, you would need roughly 35 cents, which is approximately half of 70, right? So half of 70, we're not yet getting enough at all. 70 is paying good, but it's slightly above the expected move. Now, if you're somewhat aggressive, you can do this. As a matter of fact, I do already have one Uber contract that I got into last week, I believe. I think I put it right here. You guys can see it. Yeah, we got the 70s on Friday for 41 cents. So I'm already into these for roughly the same price. So, I mean, you can copy trade me, not financial advice, of course. I'm willing to be more aggressive for the $70 strike. But if Uber opens up red on Monday or Tuesday and comes below towards the expected move, that will free up more premium on the 69s or maybe even the 68s. So what I'm saying essentially is this week, depending how aggressive or conservative you are, I will be targeting the following strikes. 70 all the way down to 67. Obviously, if Uber has a minus 3-4% day on the Monday and drops right into 69 right away, well, we're not going to write the 69s, right? You're going to go even lower. You're going to go for the 67s or the 66s. The best part of this strategy, guys, is being dynamic. You want to get as low as possible into this support zone while still getting your 0.5% rule. Hopefully that makes sense for Uber. Now, stock number 3, I'll give you a few of these, but this is the semiconductor trade. So there's a lot of opportunities in semiconductors right now. Let me show you the one that I went for personally. Once again, I took this one on the Friday session. I went with the $66 strike for about 30 cents. It's not quite 0.5%, guys, but I like the strike very much. It's very close, right? So I'm all the way down here at 66. Why do I like this zone? You've seen me play ON Semiconductor how many times this year? Probably like 5,000, right? Well, it's not actually 5,000. It's probably more like 2 dozen, but still, I've played this one a ton. I love the support range. I do like the valuation of the company. I like the business model as well, and they're just hovering around this range. So the entire time that they stay down here in the, 70 to mid 60s, I will continue to play this stock. Now, the expected move for the week is 67.78. So let's go shopping for some puts on ON Semiconductor and see what we can find down there. Let me just pull it up real quick. So we go for ON. Perfect. Let's pull up the chain. Let's see if we can go shopping for anything below 67.78, right? Think of the 67, 66s. As you can find right here, right? The 67s are paying roughly 0.5%, actually exactly 0.5%. Now, the 66s I got for a little bit better pricing. However, if you get more of a drop on the Monday session or Tuesday session, you may even be able to possibly join me on the $66 strike. So first glance, essentially the area that I like, of course, guys, is 68 all the way down to the low 60s. So depending on the size of the move down on the Monday, I want to go for the lowest possible strike I can find on this options chain. So what I'm saying essentially is 67 down to about 65. That is the area that I really like, right? And all of that is below the expected move. So hopefully that makes sense for ON. Now, obviously it's not the only semiconductor play that I'm looking at. I am looking at a few more. I won't be giving you the expected moves on the other ones. You guys can do this on your own, but I just want to show you guys where I want to trade them. So Nvidia, if Nvidia pulls back early on this week, I'll be looking for the lower 130 strikes, 132, 131, 130, if I can find some good premium on there. And that's number one. Another one that I'm up for consideration for is LRCX. LRCX has been forming somewhat of a nice base of support. As you can see, we are retesting these prior all-time highs before the breakout, should be acting as support. You can see on the weekly, we've been trapped down here pretty much since the month of August. So if I can find some good premium on LRCX in the lower 70s, right? 71, 70, 69, I would not be opposed to playing those as well, right? All about the watch list, guys. I have all these stocks on the watch list. If I find one bright red on Monday or Tuesday morning that respects my support zones, I'm going to go for that one, right? And the other one it's up for consideration is Micron. Micron, same thing, right? Nice area of previous support down here, talking about roughly the $100 zone. We've kind of been trapped here since their gorgeous earnings. So if Micron has a big dip Monday or Tuesday session, right, I'm looking for anything under 100 down to 95. Usually you have some good premium on Micron. So I do have all of these on the list, and whichever one offers me the best entries into my support areas, that's the one I'm going to go for. But at first glance, I like ON the best, right? That's why I gave it to you guys as the top 5. Now, stock number 4 as part of the top 5 is going to be Google. So Google, I love this stock for a few reasons. Number 1 has to be the valuation. We covered their earnings. This stock is amazing, guys. 1.33 peg. That is so cheap. It's the cheapest stock of the entire Mag 7 right now. Look at all the analyst price targets. They're all at least in the $200 average. Look at this EPS expansion. Look at this revenue expansion. Fundamentals are great. The business is moving great. The chart is in a very nice long-term monthly uptrend as well. And we just established a brand new weekly uptrend. And we also smashed through this big area of resistance. So now if we come back down into it, it is going to be support. So I'm going to be looking to aggressively write some Google down here, because even if I get a sign, guys, I'm looking to play the long game and ride these shares a little bit higher. Look at the weekly MACD cross. Looking quite good, right? So in that case, if Google drops a little bit more Monday or Tuesday, I'll be looking down here aggressive on this one, guys, at least for me. 175, I would not mind. The expected move is 176.25. Let's see if we can go shopping below 176, shall we? So moving into Google, for 0.5%, you will see, guys, 175, there's not that much. You would need to see at least 90 cents, 85, 90 cents on the bid here for it to be worth it for you. But so far, there's only some at 177.50. So it stands to argue that we would need to see Google drop a little bit more, maybe an extra % more to free up the 175 strike. Now, I'll be completely honest with you guys. It's very likely that if Google either opens up flat on the Monday or slightly higher, I may just write the 177.50s, guys, because I want to be aggressive on this one. But if you are the type of person who wants to be conservative, and myself as well, right? I have a lot of buying power because I have a larger account. I can write the 177s on Monday, and then Tuesday, if it drops, I can write the 175s as well. I have that benefit. But if you want to be very conservative and respect the strategy rules to a T, you would rather wait for the 175 strike to free up on the Monday or Tuesday session. So depending on how aggressive you are, 177 or 175. And of course, if Google has a very bad day Monday, minus 2%, 2.5%, if the whole market sells off, then you may be even able to find the 172.50s. So as low as we can possibly go in this range of support, 176 down to about 170 as low as possible, right? Looking quite good on Google. And the last one I'll present to you guys is Elf Beauty. Now, this is going to be a 2-pair. We can either do Elf or Square, depending on which company you guys like the most. I didn't derive the expected move for Square yet, but let's do Elf first, right? No, a lot of you guys maybe don't like Elf. I like Elf because the company's valuation right now is very fair in my opinion at a 1.63 peg at 109. And most of the analyst price targets as well are significantly higher than the current share price. They came out with their earnings just last week, and you guys know that I did a deep dive on their earnings, and I really liked what I saw. They are not being plagued by the consumer discretionary slowdown. Wall Street bunched them up in that group and sold off their stock, but the CEO reiterated it is business as usual for them. They are not dropping sales. Consumers are still shopping at their stores because they have the perfect business model for a consumer that has a tight budget. They offer premium quality products at very low prices, and it's an online business model as well. So their overhead costs are quite low. That's why I like Elf Beauty down here. Couple that with the fact that we have the first daily breakout and possibly retest, right? They are trying to get the weekly uptrend back in terms of the bulls, and we're looking for some follow through, possibly all the way up to about the 140, 150 zone, which is next resistance. So I want to play it as often as possible down here. That being said, the expected move is 113.56. So we're going to be looking at Elf Beauty at 113, see if we can find anything below there, right? Now, you'll notice that Elf Beauty, the premiums, are usually very good. As a matter of fact, I have to expand the chain to get all the strikes. So you'll see, where do we get the 0.5% rule? Well, it starts roughly about here, 109, right? You need to see at least 55 cents on the bid. And at the 109s, there is about 65 cents. I mean, the true bid and ask is about 55 here. So take this number with a grain of salt. So this one, 109 all the way down to 105. Let's say Elf Beauty has a pullback on the Monday or Tuesday morning. Usually if it gets a 2, 3, 4% pullback here, you'll probably find some amazing premium below 110, right? So we're looking at a first glance anywhere between 109 all the way down to 105. If you can find even lower for 0.5%, all the better, guys. We're targeting this lower range of accumulation, which starts at 110, but goes all the way down to about $103. So I want to be anywhere within that range. as low as possible depending on the size of the drop. So hopefully that makes sense. And that has been the top 5 options plays. Now let's look at a few bonus plays that I'm going to be looking at, right? So these are some bonus plays that do not have earnings. They just had earnings, but these plays, some of them are a little bit more aggressive, some of them are a little bit more risky, and some of them are just flat out expensive. But I figured I should give them to you depending on the size of your portfolio, depending on your risk tolerance as well, right? Give me a brief second. I got to get some coffee because I've been talking a lot, talking fast, and that's what happens, right? So BITX is the 2 times leverage version of Bitcoin. Obviously, we know that Bitcoin has just blasted beyond the all-time highs, but eventually, possibly, right? Possibly, we could see the good old breakout and then a retest. So I'll be targeting this area right here, which is for all intents and purposes about, let's call it 10% below. Now, the beautiful thing about BITX options, guys, is that since it's 2 times leverage, you get some crazy premiums on these. Let me show you what I mean. So if we're looking for maybe, I'm not saying it's going to happen this week, probably not, guys. It probably just keep going, right? But Bitcoin, if we're looking at a roughly 8 to 10% below, that would be BITX about 20% below, right? So BITX right now is trading at about $40, $39, right? 20% below this would be about 33, let's call it, okay? Now, if we look at the 33s, look at these premiums. They're absolutely juiced, right? So if you look at the 33s for the week, they're paying just about almost 1%, right? The 3350s are paying 1%, almost 1% of 33 is roughly 33 cents, right? So we're getting a lot of premium there for 20% away. So any dips on Bitcoin, guys, I will be going aggressive on these contracts and looking for at least 15, 20% away. If you're more aggressive, you can get a little bit closer, but be careful, guys. Don't trail these right on the bumper, right? As if you're driving on the highway and you're in the fast lane and you're trailing the car behind you. Do not chase this one too closely. When it pulls back, it can pull back fast and it can pull back hard. And we want to be there for those pullbacks, right? So we want to be looking at the 33s, 34s, perhaps in that range. We're getting very good premium for those. So that's how I like playing BITX. And that's just the explanation for that one. But the other ones, I won't give you the chains. I'll just look at the levels, right? Baidu, we know the China trade has been out of favor because of, the stimulus news has been somewhat underwhelming. And of course, Trump coming into office, he ran on tariffs, right? He's saying 20% tariffs, but don't forget that is just a negotiation tactic. He'll start at 20 and then he'll probably bring them down a lot, but it's just to get people to come to the table. He's playing hardball, right? If you don't know how he does this, just read his book, The Art of the Deal. It's classic Trump strategy, right? Go in there like a bulldozer with very high demands, and then you settle for what you actually want, right? So that being said, I do not think he will be as hard on China as they say. So Baidu is not even a stock that can really be tariffed. They're an IT company. This is the Google of China, essentially, right? So this one arguably has the least amount of concern with tariffs, and we're at a gorgeous level right now, guys. Monthly huge support area since 2013. The fundamentals of this business are amazing. It's one of the only China stocks that I really like playing right now. So I like playing it on the short puts. Could be interesting down there. Some other ones that are a bit more risky right now are Enphase. Enphase coming down because of the Trump trade as well. But I mean, with Elon Musk at his side as an advisor, I would be highly surprised if Trump is hard on the solar industry as a whole. As a matter of fact, if you want to see what Trump did to the solar industry, you just have to go back to his first presidency back in 2016, and then when he came into office in 2017, which is right about there. And then what happened to the solar industry? Did it actually fall through the floor? No, the solar industry actually did fine through his presidency, culminating in, of course, the massive asset rally of late 2020. That's not Trump related, of course. That's just the overall markets and rates going to zero. But I want to show you guys is, it wasn't plunging through the floor, right? So Trump is fine. And I do believe that this trade is somewhat overblown. So I'll be looking to play Enphase down here in the low 60s somewhat aggressively. And the same thing for another company like FSLR. FSLR has a very good valuation right now, super cheap. It's just out of favor, right? With rates high, the Trump narrative, stuff like that. But writing short puts down here like 180 to 160 is a no-brainer in my opinion. If you don't mind this sector and if you like the valuation and think there's upside as I do, well, this one is also a very decent play fundamentally wise, just out of favor right now. Another one is that we can look at is UPS. UPS, I love this one, not only because if we do get a sign, we get to collect a 5% dividend, but just because it's at the lower end of a past range, right? So This is the all-time high range from 2018 through 2020. We've pulled back into that one now. So in the event we come into here, like the mid 120s, would not mind writing some puts and even being assigned on UPS. The valuation down here in the 130s is very, very attractive, and they are rounding the corner of the cyclical nature of their business. And you only have to look so far as the EPS, right? Big EPS drop, and now we're accelerating back. Big revenue drop as well, coming off the highs here, and now we're re-accelerating, right? So I was looking for the bottoming out process, fundamentals and technicals, and it does appear as though we're here right now. That's why I like playing it moving forward. Another one that it's on my radar, but not yet into my desired level, is NVO. So I want to play NVO down here. Let's call it $100 down to 90. It's not there yet, but a few, 1 or 2 extra weeks of negativity amongst the stock, even though it has fantastic fundamentals, that'll do it, guys. That'll bring NVO down into the desired location. So if I can find some premium down here, $100 down to 90, I would be a big fan of buying NVO. Just looking for the monthly higher lows for possible further trend continuation. And the fundamentals are pretty good. Another one that I've been heavily trading recently has been Microsoft, but I know because of the share price, not a lot of people have access to this one, right? But if Microsoft pulls back here, if ever you do have the buying power, such as myself, right? 415 down to about 410, guys. This is the area that I really want to start writing some short puts aggressively, and even with some time, 3, 4, 5 weeks out, because I think Microsoft is on the verge of catching up with its big tech peers and really starting a very nice, weekly uptrend rally to the upside. It's been kind of sideways consolidation now since January, guys. It just hasn't done anything. But I love these long-term accumulation zones because if we're riding near the bottom end of the accumulation zone, not only can we get good premium, but if we get a sign, guys, I mean, the upside is far more rewarding if you're holding the shares and then writing covered calls against them. And another one is Amazon. So Amazon too, Amazon's doing one of my favorite patterns, guys. Can you guys tell me what it is? Well, of course, it's the good old breakout retest, right? So nice little daily uptrend, breakout retest. The breakout retest is otherwise known as the trend continuation trade, right? So weekly uptrend is very nice. In the event we pull back a little bit early on in the week into 200, I would like to pick up some shares at 200, guys, because my price target for Amazon in the next 6 to 12 months is sitting about closer to 230 to 250. Really wouldn't be surprised, especially since they're expanding net margins extremely attractively. And the PEG ratio, even in or around the $200 level, guys, is really, really, really attractive at only a 1.5. Monthly uptrend is full bull control at this point. And you can see 6, 7, 8 months of bull accumulation above the all-time highs, guys. In my opinion, this is a massive breakout, bull flag, and big breakout. Usually when you get a big breakout, guys, you do get a couple months of follow through, which is why I'm targeting 230 to 250. A matter of fact, I'm also going to be shopping for some call options, some leap call options if you do a retest of the 200. So first things first, writing short puts here. Bit aggressive, I know, because it's not at a big area of support, but I'm looking for the breakout, retest, and run. So I want to get these shares if I can, and then hold them before writing some covered calls, and supplement everything with some call options, possibly some leaps as well, right? So those are just a lot of the bonus plays I've been looking for. Now, in terms of the earnings strategy, right? So obviously I showed you guys the earnings strategy that we made an absolute killing on last week. It's a very conservative strategy to generate some decent gains, right? We had a lot of wins here. It's a very, very easy strategy using short puts. So essentially there's only 2 things you need to keep an eye out for. Number 1 is the expected move. So let's say we take one company that has earnings this week. Which ones do I want to play? Wait, let me up. I opened it up right here. Let me just find it on my desktop real quick. All right, so the ones I want to play are right here. In terms of the ones I want to play, we don't have that many earnings this week. I'll be honest with you guys. Not that many are interesting. We're through most of the big names, and all these are kind of like B-grade companies, right? So you got to be a bit careful with these. But let's say we take Shopify as an example, right? So it's called the 2 standard deviation move. And I'll explain why. So if we take Shopify, right, there's only 2 things you have to keep in mind for this, right? And obviously, since they have earnings on the Tuesday before the open, we want to be looking for these plays Monday before the close, 3 o'clock, 3:30, because the stock's going to be moving all day. So you want to get as close as possible to the close. Same thing. If you're looking for Tuesday earnings after the close, you want to be doing this analysis and this research Tuesday before the close, 3:30 Eastern PM, right? Because the stocks move before then. So you want to go on this page first. Look at the expected move. As you can see for Shopify, it is now 11.5%. So I'm going to want to go 2 times the expected move. So we're going to need to go about 23% away, right? So you go on the chart for Shopify. Let's say right now, I know Shopify is going to move tomorrow. So let's say for all intents and purposes right now, guys, it's Monday right before the close. And this is the price of Shopify, right? So just for the analysis purposes, right? So we're going to measure 23% away. Now, 23% away is down here, $66, $67. Now, is that in a big area of support? And as I've laid out on the chart, yes, it's a decent area on the weekly time frames, right? Nice weekly zone of support. We have a lot of weekly moving averages there as well. Now, you can argue that it's not as solid as this one down here, but this is the closest one we have, right? At least it's not in the middle of nowhere, right? If it was in the middle of nowhere, let's say Shopify was up here, right? And 2 times the expected move, and this was just one move, and there was nothing here, right? No resistance, no support. And then the 2 times the expected move is here. There's no levels whatsoever, right? I would not take this trade because it's in the middle of nowhere, right? You want it to at least be somewhere that there is some very solid support. Some supports are more solid than others, of course, but this one is a respectable one, so I would take this trade 23% away. So then, now that you know, okay, 2 times the expected move is in a relative area of support, you go to the options chain and you see, can we find anything down there? 68, 67, 66. And I'll show you how we do the analysis in terms of the ROI, okay? So we're looking for, it's gonna be really far away, right? All moneyness. And I'll show you guys, sometimes you get some juicy premiums. Like, look at these ELF beauties. There was so much volatility on these. I don't know if you can see. We wrote these 70, ELF was trading around 105. We got the 76 puts, guys. They were like 25% away. 76 puts for 35 cents. It was almost 0.5% for 1 day of trading, guys. It was crazy ROI per day, right? So moving into Shopify, if we look around there, 66, 67, aha, we're getting some good premium. Almost 0.5%, even though we're 2 full standard deviations away. 2 times the expected move away, right? We're being safe, we're being conservative with this. And if you want to know if it respects the ROI rules, well, just look how many days after the earnings happen, how many days to expiry do you have? So Tuesday is Shopify before the open. So they have all of Tuesday, Wednesday, Thursday, Friday, 4 days, right? If they have the earnings after the close, you only have 3 remaining days to expiry. And it matters for the following reason. I'll show you guys how to do the calculation. It requires a little bit of math, but once you get used to it, you can do this math in 2 seconds, right? So Shopify, let's look at the chain right here. So let's say we go with the 67s, right? 2 times the expected move. What you want to do here is you want to do 0.26, which is your premium, divided by the strike price. That is going to be your weekly ROI, right? But we're not holding this for the entire week. We're holding it for 1 day. The next day, if Shopify only drops a little bit, stays flat, or goes up, these contracts are going to be completely worthless, guys. So we close them for 1 day. So this is your weekly ROI, but then we do times 365 to put it on an annualized basis, divided by 4 days to expiry. This is your annualized ROI. I want this number to be over 30%, okay? So hopefully that makes sense. If you didn't understand, watch it a couple times. Now, let's say we want to do something like SoundHound, right? I know all you guys like SoundHound, right? So let's say we go on SoundHound, let's pull up the chart. Let's pull up the expected move calculator. So SoundHound AI, let's see the expected move. The expected move is 18%. So you have to go at least 30% below the current price, right? And it's going to be cheap, guys. So 30% is going to be right down here at about $5. Let's call it just about $5, right? The area. And coincidentally, that is also the support area that we just blasted out of. So I'm interested, right? 30%, 2 times the expected move is in my area of support. Now let's go shopping for the options and see if it makes sense, right? So moving into SoundHound, let's go shopping right here. And you would do this Tuesday before the close, I'll remind you. So SoundHound, to looking into it, right? We've got to expand the chain right here. November 15th. So $5, they're paying 1%. Well, I don't even need to do the calculation at all, guys. We already know we're getting good ROI, right? We're getting what I would expect to have on a week, right? It probably for the remaining just 3 days. So it does respect the rule, even the 450s for 4 cents. Now, I know that 4 cents isn't a lot of money, but focus on the ROI per day, guys. It's not about the dollar amount. It's about the ROI in relation to how much capital you're spending on that play, right? So this one, I would probably go with like something like, I don't know, like maybe 6, 7, 8, 10 contracts, depending on the size of your account, of course, right? So in that case, it could still be a nice 40, 50, 60 bucks. And what are you risking here? You're risking assignment down here in a support area for a stock that I'm only writing them on stocks I don't mind being assigned. I'm not playing everything, guys. Only play the ones that you would not mind being assigned, because there is sometimes, right? There is sometimes, and I'll show you with my own account. You want to know what these big drops are? These big drops right here, these are when I was showing you guys because I usually don't run this strategy. This is one that allows you to juice up the ROI in your account. But if you're not careful, or if the market goes through an earnings cycle where everybody is missing, you can end up with some crazy bad beats. And I got all the bad beats this year, guys, all of them. I've took a hit on all of them, and still we are outperforming the S&P. So I can recover for them, but people who aren't not diligent on closing the losses early, you can end up and get destroyed, guys. This move on CRM, the worst day that they've had since 2004 after their very good earnings, the stock was down, in excess of, let's say 20%. The expected move, guys, I was here at 10%. The expected move was 5.5%. 5.5%, it went 3 standard deviations. I was instantly down $2,000, $2,500. It was not fun. Pinduoduo, everyone thought they would do good because of Temu, right? Well, this one was a 3 standard deviation move. The stock went down 30+% the following day after earnings. The expected move was about 10, 11%. I went 20% below, and still I got slammed on this one. I got slammed with Starbucks as well. This huge gap down right there, I got that one 3 standard deviation move as well. And even Nike, and I was playing these super conservative, the same way I did with you guys, right? This one, Nike's worst day since their IPO. Yeah, you guessed it. I was in that one too. I was in the $82 strike, which is 2 standard deviations away, and it still was not enough. We opened at 75. So even though it's a conservative strategy, guys, I say that there is always some risk involved. So just be mindful, right? In these companies that you choose to play, they need to be companies that you know, and also companies that you do not mind in the event that they blow past. You do not mind closing the loss, staying level-headed, and just say, you know what? Charge it to the game, on to the next play, right? It's a conservative strategy. So far this earnings cycle, I have not had many bad beats, but last earnings cycle in June and the one in March, you guys know we were still talking about inflation, interest rates, right? Possibilities of recession. So I got hit with a lot of companies to the downside. Even Disney, we didn't get assigned, but even this one, I wrote some good premium on this one, took a little bit of a hit and had to close that one for a small loss, but it can happen to where you're even writing 2 standard deviations away, and you do either get assigned or have to take a loss. So just be careful with this strategy and be careful with the companies that you choose to write it on as well. It's not a foolproof strategy, but it's the one that I prefer. It does have a very high win rate if you're conservative, and at least you're not trying to guess with calls and puts. Am I going to be able to break even on an expected move or not, right? I'm sure you guys have all been through that before. So it's just a decent way to farm some more premium. So that's everything I had for you guys today in today's video. I hope you appreciated it. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these every Sunday in preparation of the market, the week coming up. Also, we do the daily market recaps Monday through Friday. And of course, if you have any questions on the strategy at all, please feel free to leave them down below in the comment section. I would love to help you guys out. And in the event that you guys want access to all of these juicy trades, the wheel trades, and I don't only do the wheel, guys, 80% of my account is wheel. The rest is shares, call debit spreads, leaps as well, call options, yeah. So we do the call options and shares, long-term investments, some lottery plays. If you want all my ideas, all my trade setups, market live streams every Monday through Friday for about an hour every morning, private videos, and chat with me all day and ask me all your questions about your stocks, your options, and my opinions on those. The link to the Discord is down below. So hopefully I see you in there soon if you're interested. And if not, well, I'll see you guys back on the channel. Take care. That's it for me. Have a great week of trading, and peace.